Today we're going to talk about leverage. What is it and what are their advantages, their disadvantages, as well as the lots and their different sizes. Hello to all COF students. I am Marie-Litou Vinasse-Vegis translator, and it is with great pleasure that I will teach you the basics of Forex. Before starting the adventure, it is important to remember and remind yourself of another sentence. I am and I remain a student. We're going to repeat this often to you to remind you that you are a student learning a skill that will serve you, be useful to you, and will pay you for the rest of your life. It is important to take your time and go at your own pace. Always keep a winning mind frame and you will succeed in the Forex industry. After finishing this video, you should have a very good understanding of the following questions. Feel free to pause the video to take notes and remind yourself. Everyone is progressing at their own pace, and do not compare yourself to others. In this video, we're going to use a specific vocabulary. Make sure to note all these words or vocabulary because they will prove very useful for the remaining of your training. A little helpful reminder before continuing the training on what is a pip and how to make profit in trading. The pip is the unit of measure on the market and it corresponds to the fourth decimal, the fourth number after the decimal point. And we make profit on the exchange rate difference in the form of pips. Let's say you buy the Euro USD at 1.10895 and you exit at 1.10973. The difference is 0.00078. If we move the comma 4 rows to the right, we get 7.8. So you have gained 7.8 pips. Let's say you have invested €1 on the market. With your 7 pips gain on €1, you will earn €0 and 0.0078 cents, almost nothing. If you invest €10 on the market, on 7 pips, you will earn €0 and 0.0078 cents. Now you invest €100 on 7 pips, you will not even earn 8 cents. With €1,000 on 7 pips, not even 80 cents. With 10,000 euros, you will earn €7 and 80 cents, and with 100,000 euros, you will earn only 78 euros. It's not a very good return on investment. You can understand now why before, investors had to have a capital higher than 500,000 euros in order to trade. You had to have a very large capital to have a good return on investment. Fortunately, nowadays, a capital of 100 euros is enough because the brokers have created lots and leverage. Lots are packs of units of different sizes. They have standardized sizes. A bit like a pack of water, usually you buy the whole pack. You choose the size, the volume, the pack that suits you, with for example 4, 6 or 10 bottles per pack. Here are the different sizes of lots. The standard lot contains 100,000 units, the mini lot contains 10,000, the micro lot contains 1,000, and finally we have the nano lot which contains 100 units. You will not be able to take 10 units in the Forex markets. You will take directly lots of a certain size corresponding to a certain number of units. On this chart, you can see the profits or losses you will generate according on the size of lots you are going to take. For standard lots, with 100,000 units, you earn €10 per pips. With a mini lot, a pack of 10,000 units, you earn €1 per pip. For micro lot, which represent 1,000 euros of investments, you earn 10 cents per pips. And finally, with a nano lot, a pack of 100 units, so 100 euros, you earn 1 cent per pips. The volume column is what you will select on MetaTrader 4 to enter your lot size. In fact, you will not be asked to enter 100 or 10,000 units. You will be asked to enter the corresponding volume. For those of you who want to trade on a computer, this is what it looks like. Here you see in the circle the volume which is 1, which corresponds to a standard lot. You can of course modify it. You can put 2 standard lots by entering the number 2 or 3 mini lots by entering 0.30 or 1 micro lot by entering 0.01 in the volume. And that's what it looks like if you want to trade on the phone. This is where you enter the volume of your lot. In this example, the volume is 0.05, which means that if this trade is winning, the gain will be 50 cents per pips. Here's a recap with our first example about our 7 pips gain on the market. Remember that on a standard account, trading for less than 1,000 euros is not interesting because you will earn only a few cents, whereas from a micro lot it becomes more interesting. The question you're surely asking yourself is, must we have a capital of 100,000 euros to start trading? The answer is no. Rest assured, it is possible to trade even with a small capital through leverage. Now let's talk about leverage. Thanks to them, you will be able to trade with a small capital with the big boys. When you open your broker account, you will have to choose an amount of leverage. This amount ranges from 1 in 100 to 1 in 4,000. It is important to choose it. We will explain you why. What do we mean exactly with leverage? Leverage is a strategy that uses borrowed capital to increase potential gains. It's a bit like when you buy a house, the fact that you're getting a loan allows you to buy it without having the necessary money. We help you buy it entirely. In the previous slides, we saw that with an investment of 100,000 euros, you only earn 78 euros. This is not the best return on investment. In comparison, this represents more or less what your booklet savings gets you. To be able to participate in the Forex market exchange, like buying a house, you will need a minimum capital. In Forex, your capital will be like a down payment. Let's imagine that you take a leverage of 1 for 200. This means that for 1 euro of your capital, your broker allows you to have 200 euros. If you have a capital of 1,000 euros, with this leverage it will allow you to trade with 200,000 euros. For a leverage of 1 per 100, if you deposit 1,000 euros, you have access to 100,000 euros for trading. The maximum leverage you can take is 1 for 4,000, which means that for 1,000 euros deposited, you access 4 million euros. It's enormous! Leverage can work in your favor, but they can backfire you if you do not have good money management. We advise you to take a more reasonable leverage, for example of 1 for 200. It is important to never use 100% of your capital in one position. It's a very bad idea because you could lose everything very quickly. Please note that the leverage is a huge advantage, but it can just as easily disadvantage you if you do not have the good management. Let's go back to the starting situation with 7 pips of 1, where for 100,000 euros you invest only 78 euros. Now, thanks to leverage, your return on investment increases and becomes much more interesting, and that even with a small starting capital. Let's compare an account with no leverage and an account with it. Let's say you have won your 7 pips. Without leverage, if you deposit 100,000 euros, your return on investment will be 0.07%. With a leverage, you only deposit this time 1,000 euros. Using a leverage of 1 for 100, you can trade up to 100,000 euros and your return on investment will be of 7%. Leverage is great news for particular investors like us. We remind you that a leverage is a huge advantage, but it can also be as a disadvantage if you do not have a good money management. Now you should be able to answer and understand the following questions. Read them and answer them quietly. As soon as you finish, go to the next video and remember, you are and you'll always remain a student.